Hi friends, today we are going to talk about a situation that made many people panic and shout about the end of the dollar. We are talking about the massive buying of gold by the Chinese and the simultaneous selling of US bonds by China. As I mentioned, videos of huge queues of Chinese people wanting to buy gold have spread on social media. The reason for such a frenzy is due to the current unstable economic situation in China. The collapse of the real estate market, the recent stock market crash, and record high unemployment among young people. All this makes the Chinese look for more reliable ways to save their savings. It seems that Chinese citizens no longer trust the government and its assurances that the economy is doing well. They prefer to invest in gold, feeling safer. This is despite high interest rates in the US and a strong dollar, which usually depress gold prices. But there is a view that the gold market is no longer driven by normal economic factors. It is now driven by the whims of Chinese buyers and investors. And this is bad news for the Chinese economy for several reasons. First, it shows that the CCP's propaganda about economic prosperity is not working. People feel they don't have a safe place to invest their money, so they are buying gold. Second, it could distort China's economy. The Chinese have always suffered from weak consumer demand. When people don't trust the government, they are reluctant to spend money. Savings, such as investing in gold, create a sense of security, but can also distort the economy. In addition, some people use gold to transfer money abroad, where they believe it is more secure than in China. The CCP has imposed strict restrictions on taking capital out of the country, so people are buying small-sized gold bars to carry in their carry-on luggage. But Chinese citizens aren't the only ones buying up gold. The country's central bank, the People's Bank of China, has also purchased a record amount of gold over the past year. Some are even saying that it's actually not the Chinese economy, but the US economy that is in danger. The People's Bank of China has been actively buying gold for the past year and a half. It bought more gold last year than any other central bank in the world, increasing its reserves more than it has in the last 50 years. At the same time, China has been selling its US treasuries. Last month, Bloomberg published a headline that China had sold a record amount of US bonds. These two facts caused a whole wave of panic and loud headlines like China steps up de-dollarization. China's gold rush could be the straw that breaks the dollar's back, and even China's gold rush means they're about to invade Taiwan. Oh my God, the dollar is doomed. The American economy has collapsed. Run for the hills, Shelley. Take all our company savings and buy gold coins. We're gonna have to smuggle them in. Well, you know how, to get to Canada. Wait, what are you saying, Shelley? People on the internet are wrong. Unbelievable. As it turns out, none of these headlines are true. Well, the CCP may invade Taiwan, but not over buying gold. Here's what actually happened. Yes, the People's Bank of China bought a lot of gold. And yes, they sold some US bonds. But China is not breaking the dollar. And perhaps they are not de-dollarizing. That is, they are not abandoning the US dollar at all. So what's the problem? The math. Stay tuned, I promise it will be very interesting. Bloomberg analyzed US Treasury data and calculated that China sold about $53 billion worth of bonds in the first 3 months of this year, a record amount. However, a simple calculation, even taking into account the recent highest gold prices, shows that China bought only $1.5 billion worth of gold in the first 3 months of the year. Clearly, the CCP is not selling $53 billion worth of bonds and then investing all that money in gold. So why did people react so violently? For two reasons. First, there is a perception that at any moment the CCP could sell a large amount of US debt and do serious damage to the US economy. But this is simply not true. I won't go into all the details, but the basic idea is that such a move would severely hurt the Chinese economy itself, while it would have little effect on the US economy. Moreover, some believe it could even help the US. So China's abrupt sale of a record amount of US treasuries is not a problem because other countries are buying the same amount of US bonds. During the same period of time that China allegedly sold $53 billion worth of bonds, Japan alone bought $51 billion worth of US bonds. And many other countries bought US bonds too. So no, it won't destroy the US economy. The second and more serious reason for the panic is that people believe that the bond sales and gold purchases are part of China's de-dollarization, that is, abandonment of the US dollar. If this were to happen, the consequences would be enormous, both financially and geopolitically. The US would lose much of its political influence over other countries, something the CCP would of course be very happy about. But is China really abandoning the dollar? Not really. This is where the most interesting part comes into play. It turns out that China didn't actually sell a record amount of US debt earlier this year. Here's why. We don't know exactly what the size of China's foreign reserves are, how much of it is denominated in dollars, euros, or other currencies. China's State Administration of Foreign Exchange Control occasionally publishes general data on the size of foreign reserves, but much of the information remains classified. No surprise, since the CCP likes to hide data. So how do we know how much US Treasuries China holds? It is reported by the US Treasury Department, but that data is limited to the amounts directly held in US banks for foreign countries. We know that China holds some of its US bonds through other countries, mostly Belgium. Yes, Belgium is the land of waffles, chocolate, and US debt. China holds its US bonds at the Belgian bank Euroclear. And according to Brad Stetzer, a former US Treasury official and senior fellow at the Council on Foreign Relations, the US Treasury's data on Belgium may be wrong. If China is selling US bonds, it looks like Belgium has bought a lot of US bonds. The bottom line, when adjusted for the Belgium data, is that China sold only $16 billion of US bonds, not $53 billion. Yes, China did sell some US debt, but not the record amounts that the headlines screamed about. But one could argue, Chris, it doesn't matter. The CCP is still selling US bonds. They are getting rid of the US dollar. Look at this chart. It clearly shows that China is dumping US treasuries. In 2021, China had $1.1 trillion worth of bonds. Now, according to US Treasury data, there's only $767 billion left. However, these figures do not take into account Belgium's data. And this is important because the CCP hates it when the Treasury publishes such information. Treasury only started doing so in 2011, and since then, the CCP has increasingly hidden the real data, using intermediary countries like Belgium. And as China was selling US treasuries, Belgium was buying them? The sharp drop in treasury bond levels also doesn't account for China's other dollar assets, such as hundreds of billions of dollars in agency bonds issued by US government agencies like Freddie Mac and Fannie Mae, stocks, and even US bank accounts. Looking at the data in its entirety, it is clear that China is not abandoning the dollar or dollar-denominated bonds at all. In fact, it appears that China's investments in US assets remain generally stable. But the idea that China is trying to beat the dollar sounds much sexier. So why did everyone get it so badly wrong? Does the CCP really want to beat the dollar? Well, the CCP wants the rest of the world to think it has that capability. All this hype around de-dollarization works great for Communist Party propaganda. But at the end of the day, it is vital for the CCP to save the Chinese economy. And the truth is that without the US dollar, they can't do it. China relies on the dollar for international trade, controlling the value of its own currency and its huge trade surplus. Thanks for watching to the end. Don't forget to like this video and subscribe to the channel not to miss new interesting releases. I wish you a great mood and bright impressions. See you again.